Welcome back to Explain the Charts, your go-to channel for deciphering market movements. Today, August 5th, 2025, we're diving deep into the USDCHF currency pair, analyzing both current events and the raw chart data to give you a comprehensive outlook. Starting with the recent news, the USDCHF currently trades around 0.80757, having seen a slight decrease of 0.16% in the last 24 hours. Reports indicate that the pair has been failing on a break above resistance, according to some technical analyses, suggesting a bearish sentiment. Compounding this, the US dollar recently tumbled as traders began betting on more US rate cuts following a weaker-than-expected jobs report. However, it's not all one-sided. We also see news about the Swiss franc slipping due to weak PMI data and US-Swiss trade tensions, which would typically be bullish for USDCHF. This creates a conflicting narrative that we'll need to reconcile with the charts. Now, let's shift our focus to the charts, starting with the daily time frame to grasp the broader picture. Looking at the long-term trend from March 2024 to today, it's evident that USDCHF has been in a significant downtrend, especially after peaking around 0.919 in late April 2024. We saw substantial drops, particularly in early June and July 2024, followed by another sharp decline from 0.885 to 0.857 in late July and early August 2024. The most pronounced recent depreciation occurred in April 2025, with a massive 4.05% drop, pushing the pair into the 0.82 range and further down to 0.807 today. This overall bearish momentum aligns with the recent news of the dollar tumbling due to rate cut expectations. The current price level around 0.80707 sits precariously close to a significant long-term support zone around 0.800 to 0.803, which we can observe from earlier lows in the daily chart. Conversely, immediate resistance appears to be around the 0.81 to 0.815 area, a level that has repeatedly capped upside moves since April 2025. The news also highlighted 0.8170 as a previous reversal point, reinforcing its importance as a resistance level. Let's zoom into the 1-hour chart to examine more granular movements. Please note that the available data for this time frame only extends up to July 21, 2025, but it still offers valuable insights into short-term price action during that period. Within this window, from July 16th to 21st, the price largely oscillated between 0.800 and 0.805. We can see notable drops, like the one from approximately 0.805 to 0.801 on July 16th, and another decline to around 0.797 on July 21st. This indicates consistent selling pressure on shorter time frames, reflecting the broader bearish sentiment, even then. Now, let's look at the most recent activity on the 15-minute chart, which brings us right up to August 4th, 2025, providing a very current snapshot of the market. Here, we see a short-term upward swing from a low of 0.80332 on August 3rd, climbing to a high of 0.80914 on August 4th. However, this upward momentum faced resistance, leading to consolidation and a slight pullback, currently trading around the 0.807 to 0.808 mark. This struggle aligns perfectly with the news headline USDCHF is failing on a break above resistance, as the price is indeed finding it difficult to sustain gains above this immediate resistance area. So, what are the reasons to be bullish or bearish on USDCHF? From a long-term perspective, the consistent downtrend on the daily chart, coupled with the news of potential U.S. rate cuts, strongly supports a bearish outlook. The dollar's weakness, driven by economic reports, is a major headwind for USDCHF. In the short term, the pair is currently battling resistance, suggesting further downside is more probable. However, for a bullish counterargument, the Swiss franc's own weaknesses, such as weak PMI data and US-Swiss trade tensions, could offer temporary relief. These factors might lead to short-term bounces, but likely within the overarching bearish structure. To recap the important price levels to watch. On the downside, the immediate support is around 0.803, which has been tested on shorter timeframes. A break below 0.803 could see the pair heading towards the significant long-term support at 0.7871, as highlighted by our news sources. On the upside, key resistance levels are the current 0.807 to 0.808 area, and further up, the 0.81 to 0.815 zone. The 0.8170 level remains a strong historical reversal point to monitor. Unbiased predictions for the coming days and weeks. A continued push lower towards the 0.803 support is highly likely, perhaps within 70% probability, especially if further weak U.S. economic data or dovish Fed commentary emerges. If 0.803 breaks, a move towards 0.7871 becomes a strong possibility. A rebound to the 0.81 to 0.815 resistance area holds a lower likelihood, perhaps 40%, and would be reinforced by stronger than expected Swiss economic data or unexpected hawkish shifts from the Fed. Look for candles that show strong rejection at these resistance levels for short opportunities or strong buying pressure at support levels for potential long entries, keeping in mind the dominant downtrend. Finally, always keep an eye on upcoming economic releases, particularly U.S. jobs reports, inflation data, and any statements from the Federal Reserve or the Swiss National Bank, as these can significantly impact the pair's direction. Trade tensions between the U.S. and Switzerland also warrant close monitoring. That's all for our in-depth analysis of USDCHF today. Don't forget to like, share, and subscribe to Explain the Charts for more comprehensive market breakdowns.